Okay. So welcome everyone to week 2 of charting. Hope everyone's doing good. Hope you guys had a good weekend. And we're gonna mostly look at the stocks that you guys posted under the discussion section with what you guys wanted me to look at specifically. And I know someone talked about looking at ES and the NASDAQ futures, which I'll have to switch over to TradingView for us to look at those. So I'm going to start with just the actual stocks I can look at on Webull, since they don't allow to see the future trades on this outside of like the S&P and the actual NASDAQ and the Dow Jones. So we're going to start with AMD first. And just like I've talked about in the previous charting class, I always start with the larger frames, the 4-hour and the daily, just to get a rough estimate idea of like where the overall stock is sitting. So right now with AMD, for what I see, obviously we already broke the upside of this trend, and I'll make this line a bluish. So we broke out the upside of this resistance falling wedge trend basically. And now if we're looking at it from like the smaller perspective, so we have this little rejection right here off that trend. As you can see, this is going to be the resistance that was holding it down. And once we broke above that in the current area, that zone now acts as support for when that stock has that pullback and it holds with buying pressure. So before, when it was against that trend on the larger frame, we had these rejects showing that there was a lot of selling pressure and there wasn't enough buyers to push it above that trend line. So when AMD finally broke out with buyers in this area right here, and I'll make this highlight this yellow, we had massive buyers back to back, and we actually had about 6 back-to-back green days of just straight upside. Had a slight pullback, and we pulled right back to this trend and held pretty well before pushing up for that next leg. So now in the current zone that we're in, obviously the previous resistance that broke above, now we're holding support with a lot of buyers, and we're actually making a cup and handle. So at this point, since I know from the overall that we're holding this main white zone of buying pressure currently, I'll come down to the 2-hour, the 1-hour, just to look at it from a smaller frame now, because all I'm focused on is we have heavy buying pressure where this white highlight is. This is how I do my charting. So focused on this point, we're looking at this pattern now, which what I notice is a cup and handle. We have the cup forming on the top side with this rejection. Now we have this heavy resistance on the top of the cup. So we're trying to see, are we going to pull back on AMD to where the previous support held? I'm going to make this to the red support zone down here. Or are we going to have to, or could we push back up to this resistance and double top? We could have more selling pressure if we try and push back up, but this is also when I start to include the overall perspective of like, where's the S&P sitting? How SPY looking going forward? Is there really a chance that the overall market is going to have a push? I know right now futures have gapped up the last time that I've checked. So we could see an overall, maybe a pump and dump come tomorrow. I know we have CPI. I believe Joe Biden is talking tomorrow about something with the jobless claims or just unemployment rates. And then, of course, we have the FOMC on Wednesday as well. So for my personal opinion, if we get a nice pullback to this support, you could always look for calls and an entry point if you add time, or even just a quick scalp if we hit like a quick drop and push back up. But this cup and handle pattern is obviously a bullish setup. Since we held buying pressure where this red highlight is, we're obviously focused on, okay, are we going to actually have enough buying pressure at this point to complete this cup and handle breakout on the upside past this heavy resistance where sellers keep attacking and there's not enough buyers? So with stuff that I like to do, I'll take it down to the 30-minute, the 15-minute, and I'll try and see if there's like a smaller buying zone in case we don't have that pullback to this support. Where's a safe entry point based off just a few wicks and other stuff that happened that's not at the bottom of this cup and handle? So when I'm looking at this, I kind of see a lot of rejections around this area. And I'll make this color, let's go blue. So when I'm focused on this, once we broke on the downside here, we tried to push it open. You can see a little red candle we rejected. After that rejection, we came down to the actual cup forming. We held support, pushed back up. We had a fake wick on this day and we came right back down. End of the day, we tried to push again. We failed and came right back down again, but we still held that support on the bottom. So this cup and handle stayed valid. It was forming that bottom, and now we're starting to push back up. We rejected the next day, rejected the day after in that same zone. Market open, rejected that same. So this is going to be a heavy zone on the downside if we can drop that much on AMD. So that's one zone I'll have, and that's around 80.12 a share. Going off another zone above that, if you want to add one, which I like to play it safe, I want my risk minimal. So I want to see a massive pullback. I don't want to just like, if AMD drops down to this area right here, the reason I put a line here, market open, we held on this little green candle, and just going off Friday, AMD held relatively well in that zone of buying pressure around this area, around 82.30 a share. The only point that I like to talk about is like, if this zone doesn't hold, why do you want to assume like, oh, if we hold this level tomorrow, we're going to push back up? Why not just play it safe and wait for a pullback to 80.12 a share and not risk the idea of a pullback that may scare you out of your position? If you can size light enough on this first 82.3 contest on the support, you can size light and then add if we keep dipping to that next, which I see a heavier support at 80.12 area. Obviously, if you break down on the downside, we're going to have to focus on the main support of this cup and handle where the red highlight is. And I'll take it back out to the 1 hour just to show it a little bit better. So these are the two main levels, the 82.30 and the 80.12 on the downside. And of course, the heavy zone, which is between 76 a share and 78 a share, which is the base of this cup and handle for the support. So with AMD, that's what I currently see. If the pattern works out, we could break upside. We just need a break and hold above that, about $89 a share, anywhere between $88 a share and $89 a share, break and hold. Maybe it breaks above and it pulls back and it contests this previous double top, and we hold that and push off that. So you never want to, you can chase the breakout if this cup and handle plays out, but you don't want to assume, oh, if it breaks that 88 a share, 89 a share, it's just going to like rocket off. There could always be that slight pullback because people are going to take their gains if they played this support hold leading up into the breakout. So you don't always want to just buy in on the breakout and hope that it just continues. It's a good strategy, but for me, that's not how I play. That's just how I don't chase or play the breakouts. I like to buy at the bottom so my risk is lowered. There's no like high IV. There's no squeezes on the Greeks, the option chart. There's nothing going on that I have to worry about. So I'm going to switch over to Amazon now, and I'm going to actually delete a few of these lines. And just like the other stocks that I like to chart, I start on the larger frame just to get a good census of what's actually going on overall. Let me delete a few of these. I should have cleared these before I started. I think it's better for me to walk through like what I see and not just talk about stuff that's already on the charts. So just like last week when I talked about Amazon, we're still in, like on the daily, we're in this falling wedge basically. We're just in this zoning trend of up, down. And we're currently actually contesting this previous low on this falling wedge again. So I'm going to go down to the 2 hours since we don't need to see too much of the Amazon chart from the past. We're mostly focused on, which this is one thing I talked about last week, and I remember this only because this is one heavy volume zone that I like for calls if the market holds overall. So just going off this zone right here for Amazon, if we can push back above this and hold, which obviously we're below now because Friday the whole market had that sell-off. Amazon is looking very good in this area, but now that we're below, this would be a nice spot if it pushes back up. Like I was saying, the Monday pump, we may have bad data from CPI. Maybe FOMC gives out data that we weren't expecting. I know interest rates we're looking at to raise a few BP points, but this could be a good spot to start shorting Amazon if we push back up. And then just going off the overall trends on this, on the 2 hour, nothing is going to be a pinpoint. And this is one thing I like to talk about. Like you just don't want to like align the tops like this. You want to focus on like where has it like went above and broken out, but it never held. So if I put a trend line right here for Amazon, and once again, this is how I personally chart. Other people may say something different. I like to do what fits my specific trading style. It works for me and it lowers my risk to not have like that hope of like, let me stretch this out a little bit and like only put the tip tops of these tap outs on the chart. So when looking at Amazon like this, we had multiple days right here. We had a breakout, obviously, came right back inside. When we tried to break out again, we failed that pre-market, came down. Tried to contest again, came down. Tried to contest again and open on this day, came down. Once we broke above, then we held this as a support trend. Currently, we're literally right on the verge of an upper downside for this. So Amazon's not likely like a play you want to look at unless maybe we get a push up. If we hold on this trend on the upside, this could curl and make a quick move for maybe a quick profit on calls. But if the market's red this week, or say Tuesday, Wednesday, is Amazon going to be able to stay on the flip side of that and not go red on the day? That's the main thing that I try and observe with Amazon, since it does seem to follow the SPY heavy. Bless you. So just looking at this, Amazon for me is zoning a bit. I don't want to really put attention on a stock that doesn't have like an upside or downside I can clearly see. But if we have a gap up, Amazon could be a good short if it gets back in this zone where I have this white highlight. If I go to the 4 hour, there's not much really I see with this. I mean, I know the same spot we have with the white highlight, this line right here, and I'll make this, let's go red. So just going off this line I only put this here just to show you guys like what I'm focused on. Like, why did I put this here? We held in this area. It's not like the fact I put a line at 91.84 exactly. Like, oh, 91.84 is like the exact spot. If it holds that exact level, that's not what I put that there for. It's the idea that I know in this area between, say, 91 a share to 92 a share, we may have wicked down a few times on the 4 hour, but we held it. Same thing happened this day, a double bottom, and we pushed heavy. Once we broke below, that's when we came back above for a day, but we came right back down. Like, we didn't have enough buying pressure to hold it above. And when we break on the downside, we actually hold below it a lot better. So the selling pressure on that level obviously depends on the current state of it, but it looks a lot more like selling pressure when it's below than when it breaks above. There's not much strength that keeps it there. So going off the red now, getting closer to the current time that we're in, you can see on this side, same thing as a white highlight, it almost correlates with the zone between 91 and 92 a share, 93 a share, anywhere in that area. We have whether it's above or below, it's going to act as a heavy selling or buying pressure depending on where the current price of the stock is. So even on this day right here, when this candle wick below, it held the zone where I put the red line and it broke right back above. So just using that area, that's one of the main spots that I'm personally going to be watching now, since I just noticed this in front of me right now. So I can use the 91 a share to 92 a share just to find an idea of, okay, if the market's pushing and Amazon breaks above, I could get a quick scalp on this, because historically I know when it breaks above this white zone, it doesn't tend to hold very well. So maybe I can play the scalp calls on the upside. And then when we have that tap out, which if I go back and try and find anywhere with the line around 94 to 95 a share, we can actually use a zone around right here. And obviously this would be a breakout in the current time, since in the past about month, we haven't broken back up to 98 a share. But just going off the historical levels, we've had a few tap outs between 97 and 98 a share. We have double tops here. We broke above, but came back down. We broke in the zone. We zoned right here between 97 and 91. So we have a good idea, or at least from how I look at it, I have a good idea of what I'm looking at with Amazon. I know that if we push above, 97 will be basically the tap out. If we can push, that's basically a $6 a share push. That's kind of heavy. So I'm just going to try and scalp Amazon if the market's green. I'm not going to buy and hold and hope for continuation. I may trim and hold a few contracts if I size the heavy enough, but I just want to get a quick move because I'm focused on how Amazon has like those wick ups back down. It has a wick down, it wicks right back up. It never tends to hold the move and like break out quickly. And when it does, it loses that momentum pretty quick. And just like I said earlier, I want to correlate the overall market sentiment, which I use SPY when I trade. I watch that and watch for other stocks to have a big like portion of their equity in that, which that's Apple, Tesla, Amazon, or like the top three. Nvidia's in there as well. So I try and use like correlation with SPY and stocks I'm looking at. So Amazon, I'll say it one more time and I'll move on. If the market's green on Monday and Amazon gaps up, I'll be watching for a put position because I know that obviously I'm bearish on the week with CPI and the possible like effects FOMC could have. So I'm not going to try and chase calls if Amazon gaps up and tries to push. I'm going to see if I can wait for a good resistance area, maybe get some puts size very light. So if I am wrong, I'm not risking a lot. I want to size for 0. That way, if I am wrong, I'm expecting to lose what I put in. I'm not going in $1,000 and like my risk is $300 loss. Because what if it hits that 30% stop loss and the next thing I know it rejects, and I could have been up 10% if I would have held a little bit longer. So I'm just going to size for 0 if I play anything with Amazon, so that if I am wrong in the moment, maybe if I hold longer, that reject will happen on the downside. And then someone mentioned Costco. I have not looked at Costco in a while, so just like everything else, I'm going to start on the daily just to get a good overall view of like what the stock is doing in this moment. So just looking at this right now, there's a lot of stuff that I'm focused on because we have a good trend line in this area right here. And just like before, there's a lot of stuff that I want to look at, and just focused on this. I'm trying to find the idea of like what's the main purpose of Costco as a stock. I haven't traded this in a while, so I'm not going to talk too deeply on like what I feel is going to happen because I'm not sure how it moves with other markets when SPY's red, SPY's green. I don't want to put assumptions into what you guys think because I personally don't trade this stock. So just going off the chart analysis, we're kind of zoning, symmetrical triangle, sideways movement, whatever you want to call it. We're just zoning up and down off these wicks on the upside and downside. And just like I've said with Amazon and the previous ones, if we have selling pressure on the overall market, we may drop on the downside. So I really want to focus on and put this into your guys' heads that just because like we're going to break on the smaller frames in the current times, we have this little inverse cup and handle forming. And yes, there could be a double bottom, but just going off the larger frames, you really want to take into effect that we could wick down and you could get faked out on puts and they could jump right back up. So you don't want to anticipate that move because if it does happen and like in the moment, the smaller frames, you're going to be in the assumption of, oh, like we've had red days back to back, market's looking red. If I get Costco puts, I'll make money. What if you get that fake out and it pushes right back up? You don't want to put your assumptions of hope into a trade. You just want to play the setup. So going off risk reward for this, calls on my personal opinion are what are going to make money with the lower risk, only because going off the historical of the chart setup, when we come down to this trend of the support, we push right back up. If we break below this trend and we recontest it on the upside and show selling pressure and break back down, we'll be making lower highs on the smaller frames at that point. And what I mean by lower highs, so I'm only on the 1 hour right now. I don't want to go too far out with all this. Actually, I'll switch to the 2 hour just to get it a little bit more. So we're looking at, we have a high here. This is just the current trends. We made a low here. When we push back up, we made a lower high. So we're keeping this trend going. It's not textbook material, but it's just an idea of, okay, we're in a downtrend. Logically, if this continues with the down up, lower high, lower low, lower high, lower low, this is going to keep coming down, but don't chase the breakdown on the downside with puts. Like you should expect this to break on the downside, but it's going to have a push at some point. Like you don't want to just assume inverse cup and handle on the smaller frames. We're at a double bottom. If this double bottom breaks, it's going to fail even more. You don't want to put assumptions in the trading because even if you use just this little bounce right here, it held for almost 2 days back here. I'm going to make this highlight. Let's go blue for this one. We held here. This double bottom we're currently at, and like right now, it's the same zone that we held before. So why do you want to put assumptions in like, I'm going to get puts because it looks weak? That's the main like focal point you should have is like, if I am going to get puts, size light. So that way, if it does push, you're not risking too much money. Like your emotions are out of the trade. Don't put that hope of markets coming down, the bank situation is making everything look so bad. Don't assume the downside is coming that quick. You don't want to put assumptions out there. So that is what I personally see. Does anyone have any questions about Costco or like their own personal thoughts they want to throw out there? I personally don't trade this, so I don't really want to like give too much insight on it just because I don't want to throw you guys off with what I don't really know much about. Chart wise, this is how I look at it. It's at a good support zone. It's making lower highs, making lower lows. It's just in a rough spot on the daily and the weekly that this could just wick down and then hold this support trend and push right back up. Yeah, MK says stick with the chart. That's the main thing I do when I don't really have any like idea of what a stock does, how it moves with the overall market, the volume the previous weeks. Is the average volume higher than it usually is? I don't want to put assumptions into that kind of stuff. So I'm going to move on to NVIDIA now. And for those of you that don't know, AMD and NVIDIA are both kind of in the same sector with the chip rotations. So with AMD and NVIDIA showing the same idea, they're both pushing. I'll switch back to AMD real quick just to show you. We're up on an uptrend. Costco's on a downtrend. AMD's on an uptrend. We look at NVIDIA, it's been tearing it up. It's on an uptrend. So just going off the daily, I'm actually going to go to the weekly just for a quick peep to see what's going on. So we've had a huge cup and handle formation. We had a nice little head and shoulders going right here. We got one head there. Well, we had one shoulder there, then the right shoulder here. So we broke out of the head and shoulder on the weekly, and we've just been pushing ever since. 2 red days out of the past, it looks like 1, 2, 3, 4, 5, 6, 7. About 9 weeks, we've been red 2 days, and it's held each time those were red. So now switching to the daily, I'm going to look at this and see if there's any pullback that could hold, if maybe we tapped out for calls. Like looking at this for me, I don't want to try and catch calls on this on the larger frame because I see so much upside. I could have bought in when it was in the 150 a share, 160, 180, the 200 a share. It's currently at it closed at 229 a share on Friday. So when I'm looking at this, where's a pullback I can get calls instead of having to chase the top and hope it just continues going? Where the cup first started forming on the daily, we had nice support back here. January 21st, it looks like January 24th, February 8th, and this is all back in 2022. There was nice support, and now we're back above that area. So now if we have a pullback, I have that at 210 a share. That's obviously a massive pullback for looking at it on like a smaller frame, the 5-minute, the 10-minute, the 15. But the larger frame shows me if NVIDIA can pull back to 210, this could be a relatively good buying spot for calls. If you want to play puts on the downside, you can, but you don't want to assume it's just going to have that pullback. I like to be patient and wait for a setup to come to me. I don't want to try and like, oh, it has to pull back to 210. I'm just going to get puts because it's logical. It has that like sell off. Going off other zones, before this pullback happened, we consolidated back and forth for about, looks like 7 to 8 days, 6 to 7 days between 227 a share and 210 a share. So those are the two zones I have for the downside. And I'm going to take away these lines I have upside because I don't want them to get in the way or distract anybody. So looking at this, I have 2 zones below where the current price is. So I have a good idea of what could happen. And obviously the gap fill for the upside for NVIDIA, you could say it's around that 268 a share. You could say the top of the cup and handle breakout where it consolidated the most, it's relatively around 285 a share. So I have an idea of like the gap fills, not just the scalps. Like, oh, if it hits this, I'm in. If it hits this, I'm out. I'm looking at, I want to see it move to where I have these zones, and then I'll start looking at the chart heavier. I don't want to put too many assumptions into this stock since just like Costco, I don't trade NVIDIA very often. So when I switch to the 4-hour now, we have this 227 a share. That was the first support. If you don't want to wait for 210, the 227 is going to be a heavy watch. Obviously, Friday, we wicked down and held back in February on the 9th and also the 14th and 15th. We had contested. Sorry, I couldn't get that word out. We contested this rejection of the resistance. We broke above the 1 day, but we came right back underneath the very next, and we had that sell off. Now that we're holding above that level, it's acting as support. So that 226 to 228 zone, it's holding well, but can it hold and push it back up? For me, I'd like to see a pullback to that 210 area. I mean, even having a pullback to 217, 218, I don't like to put that much like effort into something like this unless it shows buying pressure, unless I know the average volume on the day is higher than the previous and I can see there's more buyers than sellers. I'm not going to be scared about getting calls up here. If it can curl and show momentum, the larger frame like I showed you earlier on the daily, we have this cup and handle forming and trying to keep pushing up on the upside. We're holding a massive zone between 227 and 210. This could just hold with buying pressure at this point. Going down to the 30-minute, I don't see too much since it's kind of just been zoning up and down between 238 and 227 a share in the last, 2 to 3 weeks. So I'm not too heavy on smaller zones for this. I'm looking at the larger picture of what could happen if it has a massive pullback for calls, or maybe it pushes on the upside and I can see the buying pressure and just have calls and swing it light for the continuation on the upside. So that's what I personally see with NVIDIA. And if you want a rejection zone for puts on the upside, if we have a slight gap up on Monday, we have a nice zone right here. For 3 days, we contested it. It was basically a triple top. We broke above, pulled back down, broke above, pulled back down, broke above again the next day, pulled right back down. So that 238 a share is going to be a heavy reject. But if we can break and hold above that, we're going to break the high of 244 in this smaller frame. So for NVIDIA, I'll do my color coordination I usually use. Yeah, we're gonna get to Tesla very soon. That's one of my biggest watches on the week. I have a good feeling about Tesla for some reason. So for a reject or a break and hold on this level, I have 238.80 zone. So if it pushes up there and rejects like it has the past 1, 2, 3, 4, 5, 6, 7, about 8 days, it's contested or broken above and failed. I'll look for puts on the video. But if it breaks a hole above and holds that level when it like pulls back, if it holds that 238 and then the next day it starts to curl, I'll get calls only because the buying pressure is holding. I don't just want to buy like, oh, it broke above it, I'm getting calls. I want to wait. And of course, the support 227 zone, 210 is the main one I'm watching. If 210 can recontest this week and it shows buying pressure when it does dip, you can get a quick scalp on calls for that. There's no emotions really, just size light. You may even get a pullback to the 220, 225 a share if you get a nice $15 push. So I'm gonna go over to Tesla right now, only because Perez mentioned it. And I'm gonna talk about this again because I have the same charting that we did on Friday, well, this past Sunday. So I'm just going to keep this up and see how everything correlated with what we already talked about. So I know I told you guys about the 170 a share and then the 179 were the main two zones. And of course, on Friday, we had that wick below 170 a share and pushed right back up. So when I'm looking at the 4 hour now, so I'm looking at the overall news that I'm reading on Tesla. I know Elon bought, I think they said about 10,500 shares. He just filed that with the SEC to let them know he did that. I know there's speculation of him not, I don't even know if it's partnering or buying the SVB bank or doing something with it. Someone mentioned it on Twitter, but he likes to talk like he does. So maybe the hype will get to it. I'm not sure if he's going to have to sell shares if he wants to pursue that accusation. So for the overall, I think the market's going to have that pullback. And I just want to focus on like, if the market pulls back, I feel Tesla will follow. So I want to have that overall mindset of, okay, we're at that 170 a share. And that's something that I want to look at. If we can hold that 170, we're going to push on the upside with Tesla. I mean, it's almost a guarantee only going off the historical levels of that 170. I mean, we held back in November, we pulled back, held that support, pushed. We wicked below a little bit, but the very next day we pushed right back above. We held that support. When we finally did break the support, now that we're below that price of the zone, it's going to act as resistance. And this entire time it broke above, pulled back, but there was no heavy selling pressure. Like obviously it had a fake out, but maybe it just tricked people out. It ran right back up. So we know that 170, the buyers are there. But what's going to happen? Is this going to curl? Is it going to consolidate and push? Is it just going to wick up like it did the previous time and fail right back below? I'm looking to get puts on this, but I need a push before I even think about it. Because if Tesla has that quick push with buying pressure, calls on this will make a quick scalp. There's no telling what you can make on this, because if we have a push on Tesla and the market pushes on Monday, this could easily break the 180 a share. Contesting 190 in one day, I'm not too sure about it. What, a $15 push, but it could happen. Tesla is showing good signs either direction, because if we have a breakdown, we could have this massive back-to-back blood on Tesla like we already did in the past if that 170 zone does break and hold below. But if we hold with buying pressure, this could send right back up, and this inverted cup and handle, which I'll go to the 30-minute for, well, I'm going to go to the 1 hour. So we have this inverted cup and handle. This pattern could be invalid and just push right back up. I mean, there's heavy support holding Tesla right now. So I'm not going to just chase puts, even though I'm looking at puts for this. I'm not just going to buy puts and hope that we fail. I'm going to wait and see how it reacts to this zone of the 170. Is it going to contest 179 a share and just reject? Is it going to break above that and contest 190 a share? Is Tesla just going to rip like it does randomly and go 10% a day and just break on the upside, hit 200 this upcoming week? Like, we don't know what's going to happen. So I'm going to wait for the zones to give me my idea. I'm going to wait for the chart to present a setup for me to look at. I don't want to put into assumptions like, oh, Tesla's going to have that drop off and just back-to-back red, but that's what I'm hoping is going to happen. So I'm going to wait for the setup. I'm going to wait for a push to have puts go down in value, so I'm not spending as much. I'll size light, and that's what I'm looking at for Tesla. So QQQ, kind of in the same zone as SPY, just the idea of we had those back-to-back red on Thursday and Friday, and it was all with the scare with the SVB bank and everything, Silicon Valley. So just going off risk reward, I don't trade QQ that much. And I know I said this last week, so I'm not going to put too much insight on it. So I'll give you insight on what I see with the chart, and not more so like, oh, I've traded this before and this is what usually happens. Like the volume does this, the setups do this with it, because every chart and stock has its own type of moves. It all has its own volume. It all has its own analysis. It has its own setups that have a higher hit rate than other patterns do for different stocks. Right now, we're looking at a triple bottom for QQ since February to now. And just going off that zone I put there, if we pull this back a little bit, we've had a few rejections in the same zone before that held it below. So we know if the stock is below and it contests, there's selling pressure. But when the stock is above this zone and it pulls back to it, there's buying pressure. And with, I don't know if futures are still green right now like they were a few minutes ago, but QQ is probably going to gap up with, along with a few other stocks and with SPY and everything else probably. So this triple bottom in the smaller frames could have a push, and QQ could recontest that 294, 298 a share area. And I'm going to take this down. Let's go to the daily. Actually, I want to see what's going on larger. So on the larger frame, and this is one thing that I like to do just for like a gap fill, quote unquote. So I'm looking at the QQ like this. We have these lower highs forming. And then if you take the falling wedge on the downside, now I'm looking where wicks hit the most. I'm not going to do no like, oh, right here on the end side. I'm looking at the overall contest of where the candles touch the most. So just going off this area right here, there we could have a slight pullback, or even if we push up where the triple bottom was, we could recontest this trend around this area right here, and then reject on the downside on Tuesday or Wednesday, depending on the data that comes out. So I'm like, I mean, you're noticing this with every stock I'm talking about. AMD was the same way. Amazon's the same way. If we push, I'm looking for a reject. I'm literally focused on not the hype of, oh, we're going green, the bank's going to get bought out, like everyone's going to get their money back, like the market's fine. This could just be a pump and dump. I mean, CPI is coming, FOMC is coming. We got the unemployment stuff on Monday. I'm pretty sure that's what it is that Biden is going to talk about. There's stuff going on this week that could alter any chart setup. So you don't want to put the assumption of this setup is forming, I'm going to go with it, because one little word from Powell, CPI being better than expected, the market's not going to care about the setup. It's going to do what it wants. It's going to rip. If the news is worse than expected, obviously we're going to see more blood like Thursday and Friday. That's just the realistic thought process with this. So if we see a push with QQ, it could recontest this falling trend around what, 292 a share, 293. And then we could have a reject depending on what CPI does or just the overall market. And we could pull right back down to that triple bottom zone between 286 and 288 a share. So just on the smaller zones, that's what I'm mostly focused on. And that's what I see personally with the QQ. I know this is a little bit cluttered. So let me go back to the 1 hour, maybe the 2 hour. There we go. So we could get that pullback on the Q, and then we could just come right back down. You don't want to put too much assumption into it. And if we do have a gap up tomorrow, don't think calls are just going to run. It could. I'm not saying it's not. I'm just saying don't have that assumption of we gapped up, buyers are going to hit. Don't get caught up in that. Personally, when I trade, I like to let like 9:30 a.m. Eastern time to about 11:30 a.m. Eastern. I like to see the chart set up on the day. Then I like to look for a move between lunch hours of 12 to 1 going into power hour. I like to see a setup on the day. I like to see what the volume's been doing. Is the volume dying down going into the end of the day? Is it picking up? Did we open up on low volume compared to the end of the day the start of the day on Friday? I try and use the opening hours to find a consensus of what could happen going to the end of the day or maybe into Tuesday. That's what I try and look for. I'm not a big open player. I don't like to put myself out there with that, because going off my journals and what I've done in the past, I know that when I chart and when I trade, I do best later in the day. My historical hit rate from wins to losses is better when I trade after lunch hours or during lunch hours. Opening, you make a higher percent rate, but I don't have a hit rate that's pleasable for me to keep doing it. And I realize that. I'm not going to let the hype of the market pull me in the trade at 9:30 or 10 o'clock or 10:30. So that's why I stay away from it. That's my personal trait that I have figured out about myself. So I know Roku was also mentioned, and I trade Netflix a lot, which I know a few of you may have noticed from the chat when I talk about it. Roku, I feel, does have the same moves as Amazon. I mean, not Amazon, as Netflix that I want to say, but I don't try and put the assumption of like Netflix is coming down, Roku's going to come down too, or Roku's going up, Netflix is going to go up too. The Spy's going up, Roku's going to go up. Once again, I go off the chart. I try and find a setup. I try and find something that I can see within the chart that's going to give me a better chance of making money compared to losing money. And we actually, does anyone know what happened to Roku after hours on Friday? Was it earnings? Did they have news? Anyone can say something. If you don't know, that's fine. Because I definitely see after hour drop on it. Okay, so oh yeah, they were one of the top, number 3 or 4 with the money from that bank. Because I know Airbnb's on there too, LinkedIn. Okay, so that makes sense. So they're probably going to gap up on Monday if all this stuff works out the way that's been talking about. Okay, I appreciate you guys for letting me know that. I remember seeing on the list, but I forgot that that had an effect on a lot of these stocks. So Roku around that 61 a share. Yeah, SVIB. That's the actual. Yeah, yes sir. 27% of cash. That's crazy. That's actually a lot. So just going off Roku zones. Once again, I'm looking at the zones. We had this gap down. Is it going to hold from the news that came out with them having holdings in this bank, the funding? 61 a share was holding before this massive red candle hit. I mean, just going off the past, back in the end of last year, we had we had a triple top reject. When we finally broke above, we couldn't hold the first time. But once we had that massive run up on Roku, we held above this support pretty well until this breakdown on Friday. I mean, we gapped below on Thursday. Friday, we tried to recontest that level, as you can see, and we just failed right back below and held. So Roku's looking obviously bearish right now, but the question is, will this gap up on Monday only because of the news with the bank getting the money they need to give people what they need back? So we're going to look at this and just see what we can find, because I'm not too big of a fan of how this is looking right now. If it can break above the 61 a share zone and hold back above like it has before, it will keep the setup valid for continuation on the upside. So don't think like this huge drop after hours on Friday will keep it down. It's a scare thing. And if the bank doesn't get the funding, obviously this is going to keep going down on the downside. But obviously the futures, the way they're looking, the news coming out with the money coming back, the Fed's giving them like what they need, Roku could push back above 61 a share and show buying pressure to hold that support zone. So you don't want to put into assumption of, oh, we're going to reject and just come right back down. 61's going to touch, we're going to pull right back down. Have an open mind with this. We have the idea of the zone between 61 to 62 a share, 60 to 62 a share. This zone is going to be heavy. Doesn't matter if it's below it or above it. When it touches it going either way, it's going to have an effect. So you want to keep that area on your watch for Roku. That's personally what I see. If anyone has any other statements, I would love to hear it. I would love it, love it. That's really all I see with Roku. I know it's down massive compared to the highs it was having during COVID. And we're kind of just relaxing in the zone. I mean, we held that 61 I just put in going back to 2020. This weekly candle literally held around that area. I mean, we came down, pushed right back up. So we know 61 has had historical meaning even in the past. It's not just right now that it's having these kind of moves. So that's what I'm seeing with Roku. And then I know someone mentioned the energy sector XLE, which this is one thing I love to look at when I trade ExxonMobil, Chevron, anything at all. Usually when I trade stocks, I try and use the sector that it's in, and I try and correlate the two charts to see what like mirrored image can I find. Like sometimes a sector will be like green on the day, and then the stock within the sector won't be green. So it makes me think like, is the stock just being oversold? Is the sector being overbought and it's not actually showing the true value of itself? So I try and like mirror the two, if that makes sense. Energy stock, like ExxonMobil, I'll use XLE to like find that correlation, that pattern, that mirrored image of like, okay, XLE is green on the day. ExxonMobil was trying to find that push, trying to find that buying pressure. Maybe ExxonMobil will catch back up with the sector and stay green on the day with the overall of it. So just going off the 4 hour for this XLE, I mean, it's the same as everything I chart. I just look for the main zones, and it's mostly between 81 and 83 a share on this energy sector. When we pull down, we pull back. I mean, every time in this zone, it looks like we're holding. And when I go to the daily, I mean, we had a reject with resistance right here. So that zone has played out historically as well. And then when we finally recontested for a double top, we failed a few times, but when we finally had that buying pressure, we broke above. And that's when I think ExxonMobil hit the all-time highs, was that massive push we had towards the end of the year last year. And then, of course, when you recontest that zone around the 83 a share, buying pressure is there to keep the energy sector up. Now that we're breaking back below, the question I'm asking myself is, are we going to have a red wick like we did right here and just push green right back? Is this just going to be a fake break below the support just to get people out, to scare tactic? Could we push back above and hold? That 83 zone is going to be a massive eye for me. So if I keep ExxonMobil on watch, if I keep Chevron on watch, I'm going to be looking at this 83 level on XLE to see if this holds and tries to curl up. Maybe energy sector stocks are going to follow the same pattern. Maybe they're going to follow the same suit with buying pressure. If the overall market's red and energy's green, that gives you a perspective of, okay, the market's red, but energy's hot. Like that's the hot sector on the day. You may want to look at ExxonMobil. You may want to look at Chevron, those are like the top two in that sector. You may want to play what's hot on the day and not just what you're comfortable with. Like you want to find what's good. Is the volume higher than usual? What other sectors are green besides energy? Try and find that correlation. Does anyone else have any stocks? Because if not, I know I want to pull this up. Rocky was he asked a few questions. I do want to cover what he was asking because I want to give as much feedback as possible for someone that doesn't have much knowledge with options in general. I mostly covered the support and resistance he asked about. And then he said, concept of the EMAs and the VWAP, what are your favorite indicators that you use? And if you could explain the concept of how to use them while chatting with some examples. So I'll say this is all personal opinion. This is what I use. This is what I have back tested. So other people may not do this, but there's a decent amount of people that actually kind of use this exact EMAs like what I do. So I'll show you on the smaller frames when I'm scalping basically. So I'm on the 5 minute right now, and I'm going to take away this highlight to take some distractions off. So the EMAs, I'm going to take off the 55s, so that's not too important. So I'm just going to have the EMA 9, the EMA 21. I use these on the 5 minute a lot. I'm looking for it's going to be hard to explain this because I don't know the exact deep definition of each. I know it's the average moving for the previous 9 days, previous 21 days, but I just use these as a direction. What does the candles do on the 5 minute that holds? And I look for the strength on them basically. So I use the EMAs for Amazon on this example. It may be pretty difficult, but I'm going to use this on the downside to explain what I look for. So obviously, if you guys don't know, a golden cross and the death cross, the golden cross is basically when the 9 EMA or whatever EMA you use, the smaller one goes above the larger one. So the 9 goes above the 21, we're on a golden cross. They work best on the larger frames, but the definition is basically what I just said about how the smaller, whether you use the EMA, the MA, it breaks above the larger one. The smaller breaks above the larger EMA, and that's a golden cross. And then when the smaller one breaks back below the larger, it's called the death cross. That's what I usually look for when I watch for puts, because when the EMA 9 for me on the 5 minute goes below the 21, I'm focused on how is the stock going to react when it contests the 9 EMA. And if it breaks above the 9 EMA, how is it going to react to the 21 when it recontests? That's how I use the 9 and the 21, is on the 5 minute, the 15 minute, and rarely the 30, because the EMAs don't move very much since the candles are so much wider compared to the 5 minute. There's more to use for the smaller frames when I use the EMA. So I use it as a scalping method. If I'm in a swing, I watch the EMAs on the smaller times to see is the strength there for my position to keep going up in value, or is it losing that steam and I just want to trim and get out and not risk having to hold and have my emotions in play. So just like when this death cross happened, the 9 broke below. So overall, right away, I'm thinking, okay, we had high at the time, you don't know if this is going to be the high of the day or not. But obviously now that the day is over with, we know that was the high of Amazon for the day. And if you correlate this to pre-market, look how that lined up, almost dead on. I mean, the pre-market high, it double topped at the midday around 11:30, 11:40. So right away, I'm thinking, okay, we had a double top. We're pulling back heavy. The 9 EMA is dropping below the 21. I can look at this for a put position if we make a lower high on this trend now. So at this point, I'm waiting for something to happen. I'm going to draw this off center just to give a visual idea compared to the actual setup that happened. I'm looking for a lower high to break, which after it had that double top with pre-market high, I'm looking at the previous higher low, which is where the white highlight is. So I'm looking for a lower low to form, which is basically what happened in this area right here. It didn't have a massive push to go back on the upside to make that lower high, which I would have wanted around this area. And yes, it would have broke above the EMA 21, but that's when a trend comes into play and not just the indicators that you're following. So if I want to scalp this, it's a risky play, but obviously we know the double top just happened with pre-market. It's showing heavy selling pressure. The overall market's coming down. It was Friday. So like you have a census of the overall. You could start a put position. And like what I usually do if I scalp, I'll enter on like if it holds the 9 EMA on the 5-minute for a few tickers, my sell or my stop loss will be a break above the 21 and a hold, not just a break in like it wicked above, I'm getting out. It has to break and hold for my personal sell opinion. And the reason I do that is only because when I'm looking at the previous higher low, I bring this over and try and find out, okay, if it pushes above the EMA 21, it could reject around this zone and pull right back down. So I don't want to have the assumption of the EMA 9 broke above, I'm in puts, I'm scared, I got to get out. What if it keeps pushing? If it does push and you size light enough, first you have this previous higher low, that's going to be a reject. And if that rejects, now you have a lower high on the trend, which I'll move the white line now to put that into perspective. It would reject around that area. Say it doesn't reject you and it keeps pushing. You have a previous double top that hit. That could be a triple top if it pushes even higher. So now you're looking at the consensus of if it pushes to the high of the day again, it could reject. So why do I want to sell if I'm sized light enough? Like you have enough time to hold this. If you're sized heavy, you may not have emotions to hold that long. And that's going to put so much like pain into like, I'm down this much. If it breaks out, I'm screwed. If it rejects and if I get out and it rejects, I'm going to be upset because I should have held longer. You want to size where emotions are not in the equation. You don't want to oversize. Like so many people just want to catch the move, make a lot of money. If you get lucky one time and keep doing this, the one time you don't cut, you're losing all your gains. I mean, you could lose 2 weeks, 3 weeks of gains in one trade if you just don't cut early because you know you're wrong, but your head is so hot on, oh, I've been on a green streak. Last time I held when I was down, it came back to my favor. That one time it doesn't, your account's done. And then if you don't have a solid mindset after that, the money you just lost, you're going to try and chase it back, not realizing from when you had this hot streak going 3 weeks ago, you may still be up overall from where you first started. Don't focus on where you were and what you lost. Like you're not trying to, like you're making money with trading, but you don't want to just like money. What is the chart giving you? Like, are you sizing light enough where when you enter a trade, your emotions are not like trying to scream you out of what your thought process was pre-entry? Like you want to plan this. You want to really have an idea of what is going on. Don't just enter trying to make money because money gives you so much emotional like instability. I mean, everyone knows that even outside of trading, just money brings emotion. That's just how it is. You don't want to put that into trading because you're trading with your hard-earned money. Trade a setup, find something that works for you. I like zones. I like to wait for the patience. I like to wait for something heavy to happen so my risk is minimal. I don't like the chase. I didn't play puts at all Thursday and Friday when these drops happened because I didn't want to put myself in the position of I missed where I wanted to enter. Now I'm just going to be chasing. I would have made money, obviously, but I wouldn't have been happy with that because I didn't follow what I know I have to follow. The money's nice, but I didn't have like when I journal that, like after that trade, if I make money, what am I really charged? Like I chased, I made money chasing. I can't do that. There's no like lesson learned. The only lesson I learned is I can't do that again because if I'm wrong chasing, I'm going to lose money next time. And then another question that Rocky said was your personal charting techniques that you use when you enter a trade. Do you look for support resistance with a few indicators, or is there something else that you look like? Like, do you use the VIX, the SPY levels? So he's basically asking me like, what do I look for before entering? Do I find a specific like overall market sentiment? So I told him when I responded that I'm going to show him like my setup I use on Webull when I have my charting. So I'm going to see if this will switch over. Do you guys see this new pull up I just had? Did it transfer over? Or is it still stuck on the single chart? He said yes. Okay. So I had to scrunch everything together. My monitors I have back at the office house, it fits a lot better. So I'm on like a massive TV right now. So I tried to shrink it where it all fit on this screen share. So on the left side here, I have the time and sales. I have the order book. I have my watch list. And I have just the chart of the stock that I'm looking at to buy an option for. So for this example, I'm showing I have Amazon right here. And let me take off these indicators because that's going to be kind of annoying. So I have the Amazon chart here. I always keep SPY pulled up. I always have SPY pulled up. I don't care if it's the 5 minute, the 15, the 30, the 1 hour. I find the overall zones on SPY and I'll put those lines in. So when I'm on the smaller frames, the 5 minute, the 15, I don't have to like, if I see a random line, which I'm just going to put one here to give a like an example of how I think. If I see a line right here, the day of, I'm looking at this like, why did I put this here? Like Friday, there was no reason to have this line there, but maybe that line did something last week or a month ago. So that's why I need to know what my lines are looking like before I just only have the 5 minute. So I see on the day of SPY. So I prepare before market open. I have all this stuff pre-charted. I know the zones and why I put them there. And then next to SPY, I usually either have the QQQ or I'll just have like another random stock I'm looking at. So if I'm watching Amazon and Tesla only on the day, I'll put like the main watch, which I'll put Tesla over here and I'll put Amazon in the top corner. So I can see both. Like I have both in my vision, but I don't have 6 charts up. I don't have 5 charts up. I only have the 2 main watches and I'm waiting. I'm not trying to catch the play. I'm waiting for the play. And then outside of the actual stock charts, I have the contract I'm actually looking at. And I'll actually pull up one of these. Let me go to Amazon real quick. So basically, let's say I'm looking at let's go Amazon 90 calls. Obviously, it's in the money, but I'm just giving an idea of this. So I'll have this pulled up and I'll have the chart of the actual option pulled up. I need that to go away. There we go. So I'll have the actual chart of the option with the tape and the order book right next to that as well. So I'm watching the stock, the contract of the stock I want to get, obviously, and I'm watching tape on both of them. I usually SPY 40158 worked beautiful. I'm actually going to put that into level 4105. Okay. I'm going to put that after. That's actually something I'm going to put in and look at that. So like, this is literally my setup. This is what I used. I've been doing this for this specific idea right here about probably a year and a half. And it's been working well. I watched the tape on the actual share. So Amazon, I have that pulled up. And then the actual contract, I'm looking at the chart to correlate the option contract chart also with the stock chart. So I'm looking at like, is the theta that bad where it's pulling it and consolidation on the actual stock is holding? So I'm looking to see like what's the best stuff you can give. Oh, I gave you that. Let's see, I didn't know unless I looked. Yeah, I gave you that level. Making me feel good, man. I appreciate that. But yeah, so I'm looking at the tape for the actual contract. I'm looking at the SPY chart. I'm looking at like the secondary chart that I'm looking at to buy. I'm looking at only a select few things, but I'm always watching SPY for correlation. I'm always looking at the main stock, which is Amazon. And then I have the contract chart right next to it. So I'm focused on one thing and I'm waiting. If I don't see a play the first 30 minutes, I'm not going to be all, oh, let's try and find something else. Let me go over to this stock. I just wait. If I have to, I get up and leave my setup. I'm not going to sit there if I know like my zone is a $1.50 drop. It could drop very quick, but I'm not going to see it drop in 30 seconds. It could, but it may not do it. So I'm not going to sit there and just like be bored and wait, let my emotions try and trick me into making a play I shouldn't make. This works very well for me, this specifically. And then what else? He said, finally, the most important question that I have is something I get confused when people use terminologies like SPY rejected 200 EMA or entering the video puts when SPY rejects 200 EMA at 5-minute time frame. When I hear this, it confuses me all the way. How do I learn all these terminologies and basics? So I'm going to speak on my personal experience throughout the years and the past months, most especially that I've learned the most. I try to use stuff from my own experience. Like other people will talk about it, I'll test it, but I'm not going to use it and act like, oh, it worked for them, so it has to work for me. People back test stuff that works for them. They don't just use it one day and it's like, oh, it worked. Like, this is crazy. Not everything is 100% guaranteed. I have a setup I use. I don't win every time, but my risk is small, so I don't lose over the wins long term. I'm fine long term. When you look at stuff that you see online, don't just see, because someone's going to post one gain of something they used and you're going to think, oh, they're so good. But like, how many times have they really failed with that setup, but they just don't show it? You have to test stuff out for what you have read and see if it fits your personality of a trader. The 200 EMA, I think I responded to you and said, I use that on like the daily. I like it on the larger frames. I've heard people talk about that on the 5-minute, but I don't really see value because the 5-minute for me, I like the EMA 9 and the 21 because I like the scalp. That's my scalping method. And then you said, what time frames do you use and do you check multiple time frames to enter your trades? So like when I chart, like you guys saw, I start with the daily. If I have to go to the weekly, I'll go to the weekly, but I use the larger frames and work my way down. I want to see the overall perspective of the setups before I just go to the 15 and the day of, because what if like on the day of we're pushing green, but we're approaching a historical heavy rejection zone that you don't even know about because you never checked. I always go to the larger frames. I want to see the bigger stuff. Coco, bro, come on now. I always look at the larger frames first, but when I enter a trade, I love entering on the 30-minute and the 15-minute. That's my go-to. I always enter around the 15 and 30-minute time frame. I like to wait for the candles. I like to wait for like those increments of like 1:30 just hit, 2 o'clock just hit, 2:30 just hit. And I like to see how the new candles form off where they're like ending to starting. And listen, Rocky, don't think you're asking too many questions, man. I know you said like there's a lot of questions and you get confused. Take advantage of this. Ask anything you want. Message me in my DM, message it in the Academy discussion. It can be a random question that you're just like, this may sound weird, but I just don't know. Say what you need to say, man. Like, we're here to help you. That's the whole point of this. We want you to succeed and be self-efficient. That's what we want to teach. And I think if I didn't answer one of your questions, let me know real quick, because we're coming down to the last few seconds of this live charting. And I'm pretty sure, I mean, I charted all the stuff people recommended. I know that you guys talked about the ES and I didn't get to that, but I will post a picture of the chart underneath the lesson and discussion for the charting today to like show you what I see, and I'll put the lines and the highlights. And I think Kenny's in here the last I saw, so I'll have him even post something as well for what he sees. How do I find the tapes? I never used them. Where can I find them? So with Webull, the time and sales, I think, is like $1.99 a month. And then the NBBO, which is like the actual in-depth order book to see stuff, you'll notice that like it will cost $9.99 a month, $9.99 a month. It's a lot cheaper compared to the DAS Trader. DAS does have better data. It's quicker. I get all that. But for me, I like to stick with Webull because I'm familiar with it. I've tried DAS and it's very, I don't want to say iffy, but just from my personal experience, I like how Webull works. I like how Webull has maneuvered through my life. I've used it the most. It's very good for mobile. The charting on mobile is good for that. So like when I chart on my phone, the desktop will have those lines when I get on my desktop. So I can do stuff away from my house. I can do stuff at my house. It goes back to my phone. I try and stay in the same sync with that. So you can find the tape. If you make an account, you'll just go to subscription base and buy the time and sales, and you'll buy obviously the NBBO. And at that point, I mean, I'll send screenshots for the mobile, but for desktop, you literally just have to, I'll do this real quick for you. So when you're on this, you have the chart. If you right click on the top, it will say like add widget. You just go to the widget, and then I want to say the order book is one of them. And then obviously if you have to go to all widgets here, you just find time and sales, and it will put that on there. If you drag and hold the time and sales, and then hold it here, it will go on the chart with it. That's how you add it to a tab. How much does Webull charge per contract? So Webull's contracts are not like an exact price point, but I'll just give an example of trades I've done in the past. I know IBRK, when you get like one contract of SPX or SPY, it's like $1 something, $1.10, $1.14, sometimes $1.80. I've bought 50 plus contracts on Webull, and I've been charged $5 for 50 plus contracts. Like $5 to buy it, $5 to sell, $10 total. Webull's fees for contracts are extremely cheap, and I don't know if they're going to keep it that way. So the Webull SPX contracts are 55 cents a piece, which I didn't know that because I don't trade SPX on Webull. I trade that on IBRK. But like regular contract, oh, thanks, Coco. For regular contract fees like Apple, Amazon, Tesla, whenever I've bought in those, it's like 10 cents a contract, 5 cents, sometimes 4 cents. If you buy, I've bought 100 contracts before of Apple, and I spent like $7 for fees to buy into 100 contracts, $7 to sell those contracts. That's my favorite thing about Webull. The contract prices for the fees are extremely cheap compared to others that charge a flat fee of 65 cents, $1.10, $1.50, whatever it could be. Is there any more questions about charting? I'm going to stop the recording, but I'll answer a few things off camera like I did this past class on Thursday. I think I answered all your questions, Rocky. I believe so. Yeah, you're welcome, everyone. You're welcome. Can I send you the plays I plan to take in your DM to know your thoughts? And also, I would like to know your plays, understanding thought process. Do you post any? So I don't post any alerts in the chat. I'm here just to teach and help you guys become self-efficient and prepare you for the Signal server if you end up going in there, or if you're already in there, to like lower your risk and understand the process of why admins are learning what they do. So let's talk in the discussion section of the Academy, Rocky, so that other people can see what we talk about and maybe they can learn off that as well. Anything that you have, send, and I got you, man. Rest of the night, I'm just going to be charting. I'm just going to be preparing for tomorrow and the rest of the week. So anything that you want to talk about, let's do it, bro. Let's do it. Let's get you ready. Yeah, appreciate you, Kenny. I'm gonna but yeah, this is the end of the charting session, and I'm gonna stop